This is not about getting wealthy, buying, insert whatever it is here. This is not some secret that the wealthy don't want you to know. You do not have to be rich to get into the banking business. This is about controlling how you finance the things that you need throughout the course of your lifetime. Everybody banks. The question is, who is the banker in your life? Who is controlling the banking function as it relates to your needs? All right, let's get one thing straight. You can't be your own bank. I mean, what are you going to do? Put an ATM in your living room and bounce your own checks and repo your own couch? Becoming your own banker, that's where the real power is. And that's what I'm going to break down for you. The process of becoming your own banker, the infinite banking concept developed by my late mentor, R. Nelson Nash. The essence of the concept is to control how you finance all the things that you need throughout the course of your lifetime and to recapture the interest, the money that you're presently paying to banks and to finance companies. Now, words have meaning. Nelson, in developing this concept, didn't want people to become a bank. So when you hear this language, be your own bank, be the bank, beat up the bank, all of these variations, what Nelson was encouraging folks to understand is the four characters in the financial play. And those four characters are the depositor, the borrower, the banker, and the bank owner. And the fact is, for most people, including you, you're only two of the four characters in the financial play. You're the depositor, right? So think of all of your sources of income being deposited onto the books of someone else's bank. I say that again, someone else's bank. You pay taxes on your sources of income. Then you begin to systematically transfer that money away from you in the form of every financial transaction to take care of all of your personal and business financial needs. You permanently give up the opportunity to earn interest on all that money. You'll never see it again, spend it again, save it again, not only for your generation, but for every future generation that comes after you. You're also the borrower. So when you need access to capital, just think of things that you would need to borrow money for: vehicles, property, appliances, business equipment, investments. The list goes on and on. And when you're the borrower, you're getting the money by being approved by the banker. The banker is the individual that determines whether or not you get approved to access someone else's pile of money. And the fourth character, the bank owner, is the one, understandably so, who makes the most money. When you embrace the infinite banking concept, you're not becoming a bank. You're equipping yourself to be able to implement a process to become all four characters in the financial play. Words have meaning. How do you set about becoming your own banker? The process is meant to be ridiculously simple. The first thing that you need to understand is the problem so that the solution actually matters to you. Well, what is the problem? The problem is you're doing all the work to earn income and everyone else is getting all of it, including Wall Street, including the banks. That's a problem. You're also likely not feeling that you're not taxed enough. That's also a problem. The government is just hovering all over your assets with a giant knife and fork, just waiting to consume them. And so the solution to the problem is to implement a process where you get to shield your wealth from being decimated at the highest levels of taxation. If you're even the least bit effective at accumulating wealth, you've definitely got a problem. Where you can control how you finance all the things that you need throughout the course of your lifetime. Just think of anything that you would pay cash for, lease, or finance, and you get to be in a position of total and absolute control. This is not some secret that the wealthy don't want you to know. You do not have to be rich to get into the banking business, something that my late mentor often reminded us of. He wrote the book titled Becoming Your Own Banker. This book is self-published. It's sold more than 560,000 copies. The reason is that the process works. I've personally been implementing this concept since 2008 and have been coaching North Americans since my introduction to this incredible process. In our family, when we decided to implement this, we first decided that we were going to purchase a product. And that product is dividend paying whole life insurance. Now, when most people see this concept and they understand the tool that's utilized to implement it, they're only thinking about implementation at the individual level. How is this concept going to be an advantage for me individually? And what we're educating our clients to do is to think about their families. If you just picture for a moment all of the money that you and your entire family have spent up to this point in your lifetime, take a moment, think about that number and just how big it is. Could you write me a check for that amount of money right now? Of course you couldn't. You did the work to earn the income required to purchase all those things, and so did everyone else in your family. But you transferred all that money away from you permanently. That's a problem. When you embrace this concept and you begin by purchasing the tool, which is dividend paying whole life insurance, ideally with a mutual company, a reputable mutual company, and you begin to pay premium. And in exchange for that premium, you are the owner of a unilateral binding contract. This insurance policy or system of policies, ideally, is not an investment. Never has been, never will be. We're not addressing the yield of an investment here. This is all a matter of where your money is flowing to, who it's being put to work for, and for how long. When you pay premium, you begin to accumulate cash value inside of the policy or system of policies. You can borrow against that ever increasing accumulation. Cash value grows daily, uninterrupted. It's not tied to stock market volatility, to recessions, to real estate cycles, to political turmoil, to changes in the tax code. Cash value rises daily, uninterrupted. The insurance company contractually guarantees that by age 100, if you're Canadian, or age 121, if you're an American, the total cash value of the policy must match the total death benefit. And if the policy is set up properly, then the death benefit is going to continually increase with no increase in premium ever. And because the policy is dividend paying, each year that the insurance company declares dividends, they're contractually guaranteed to be paid. They cannot be repossessed and they cannot lose value ever. And if you chunk those dividends right back into your policies to purchase more paid up additions at no additional cost, you create this ever increasing compounding mechanism that gives you ever increasing access to capital. When you need access to capital, you request a policy loan from the insurance company because you co-own the insurance company. The insurance company issues a policy loan unstructured, meaning there's no repayment schedule. You control that as the policy owner. So when you need to go purchase, think of what you might otherwise have financed, maybe a car. You request a policy loan from the life insurance company. The insurance company places a lien on the death benefit of the insurance policy, not the car. The loan is private, meaning it's not reported to TransUnion. It's not reported to Equifax. It's a private loan between you and the insurance company that you co-own. You go and buy the car using the insurance company's money. Your money was paid to the insurance company in the form of premium and policy loan repayments. The cash value in the policy is not your money. In fact, it's not money. Cash value is the net present value of the future payment of a death benefit. The insurance company permits you to borrow against that accumulation on demand on your terms. So now you're the depositor. You're paying premium. You're the borrower. You're requesting policy loans from the life insurance company. Capital that is readily accessible on demand on your terms. That makes you the banker because you control the repayment schedule of your own policy loans. The insurance company itself only administers the insurance contracts. The insurance company itself does not own them. So that puts you in a position of total and absolute control. And given that you are the bank owner, meaning you are a co-owner of the life insurance company, You participate in the annual divisible surplus generated, where a portion of that, if the divisible surplus is 200 million and 100 million of that gets paid out to the policyholders in the form of dividends, and the remaining 100 million gets added to policyholders' equity, you co-own the lender. So now you're in a position of total and absolute control. So thinking logically, if you know that you can contribute almost unlimited sums, you're paying no tax on the daily buildup, you're paying no tax on the death benefit proceeds if you're structured properly, you have ready access capital on demand on your terms. How much of your capital do you not want residing there? Your money must reside somewhere. And what happens in the marketplace is there's all this comparison going on because everybody's talking about the tool, not the process. And even in discussing the tool, they're going about it in a way that is completely illogical. To give you an example, you may hear things like, hey, don't put your money in a 401k, put your money in a dividend-paying whole life insurance policy. That's a better place for you to put your money. That's like comparing a bicycle to a washing machine. You're not going to buy a washing machine to get you from point A to point B, and you're not going to go buy a bicycle to wash your clothes. A dividend-paying whole life policy is a unilateral binding contract. It is not an investment. It is not meant to address the function of investing. It is not meant to address the yield of an investment. So comparing for the purposes of, I can get a better rate of return putting my money, insert whatever product here, versus putting money into a dividend-paying whole life insurance contract is really an exercise that is completely illogical in my view. If you want to invest money, invest money. But the fact is you can't get a higher rate of return doing anything if you ignore who's controlling the financing function of that very thing that you are contemplating doing. Someone must perform the function of banking as it relates to your needs. Someone in some organization must be the banker as it relates to your needs. There are no exceptions. To think that there are, then you must think that the law of gravity doesn't apply to you. Everybody banks. The question is, who is the banker in your life? Who is controlling the banking function as it relates to your needs, your family's needs, your business's needs? That person can and should be you. The very first step that I encourage anybody to do when investigating the infinite banking concept, outside of learning on this great platform called YouTube, is to get your hands on a copy of this book. It's 92 pages. It'll take you less than an afternoon to get through, but I promise you it's going to open your eyes to a whole new financial world. Second step, ignore the sensationalism that's out there. This is not about getting wealthy, buying, insert whatever it is here. This is about controlling how you finance the things that you need throughout the course of your lifetime. My late mentor often said that he felt that dividend-paying whole life insurance was grossly misclassified. And if he could have renamed it, he would have named it a personal monetary system with a death benefit thrown in for good measure. So for all of you people out there spontaneously self-combusting over trying to figure out, should I put money into a 401k or put money into a dividend-paying whole life insurance policy, you've got to match the right tool to get the job done. So if you want to invest capital, choose an investment vehicle, invest capital. If you want to become the banker as it relates to your needs, as it relates to your business's needs, your family, your extended family, etc., the best tool to get that job done is dividend-paying whole life insurance, ideally with a mutual company, reputable company, and ideally a system of policies. Not just, this is not meant to be achieved through the device of a single policy. In our family, for example, we have 77 dividend-paying whole life insurance contracts, 27 individual lives insured, annual premiums in excess of 1.35 million. We control the banking function as it relates to our needs. We didn't become the bank. We became the banker as it related to our family and our extended family's needs. We became all four characters in the financial play: the depositor, the borrower, the banker, and the bank owner. Ridiculously simple. This is not meant to be sensationalized in any way, shape, or form. We pay premium, we accumulate cash value, we have a permanent, ever increasing death benefit, cash value that rises daily, uninterrupted, not tied to any stock market volatility. Our family's net worth increases every single day, regardless of what's going on in the stock market, the real estate market, politics, taxes. Our net worth rises day in, day out. And when we need access to capital, whether it's to take advantage of a high caliber opportunity, because when you have ready access to capital, opportunities of high caliber will track you down. We get to pounce on those opportunities because when we need access to capital, we're not going through lengthy, nosy credit applications. We're not being subjected to an audit from a lengthy, conversation with a loan manager. There's no income verification. There's no credit check. The reason is simple. The insurance company itself guarantees the collateral for the loan, the cash value, which is why there's no repayment schedule required. Ridiculously simple. And when a financing need arises, you address that need and you fulfill that by requesting a policy loan from the life insurance company. You co-own that company. So where do you want your financial energy flowing to? If you and I owned a Safeway grocery store together, we would never buy our food from Walmart. We would want as much of our business being conducted with our own business, not someone else's. When you request that policy loan, there's a lien on the death benefit for the loan balance. The repayment schedule is yours to control. That makes you the banker. And that makes you the one who calls the shots. And when you're able to control that financing function in your life and you can get the banks out of your life, what a peaceful, stress-free way of life that is. And so I would encourage you to do three things. The first, get your hands on a copy of this book titled Becoming Your Own Banker. There'll be a link in the video. Purchase a copy. We'll courier it right to your front door. The second step would be to create a time to have a conversation with the right person on my team. There won't be anything to buy. The whole purpose of the discussion is to establish whether or not we can serve you and add value to what you're already doing or what you're contemplating doing financially. And then step three is to get in the water. You can't learn how to swim unless you get in the water. And the longer you wait to take control of this banking function as it relates to your needs, the more you penalize yourself. You're going to need the use of money for the rest of your lifetime. And so is every future generation that comes after you. The question is, who is the banker as it relates to your needs? And how much capital do you want flowing into your hands versus through your hands?
You can tell really fast if someone wants to commit to doing IBC the way it was designed to be done, which is really stage 3, stage 4, or whether they just want a safe place to store money. But the biggest issue is when you commit to a lower stage, but think you should be able to do all the fun things that people are doing on stage 3 and stage 4 and have it make sense. You have to add intention. Money has to be put in on purpose in advance